my friend Ramesh Prabhu, WhatsApp, Dilli sir, other dignitaries on dais and friends. For next half an hour, I'm going to discuss about various income tax provisions related to redevelopment. Now, redevelopment has become very, very important. Just now Dilli sir said how many clauses you have to keep in mind. And somewhere I read, in our country we have 36,000 acts. Out of that, 92 acts directly apply to redevelopment, like Income Tax, Transfer of Property Act, Contract Act, Stamp Duty, Registration, Development Control, and the list goes on and on. And every act, we have acts which define how to implement those act provisions. They are income rules. Now again, rules are complicated, so government issue circulars, and circular normally issue to clarify the rules, but normally they create more complication in the rules. And to clarify the rules, the circulars, they bring notification that create further complications. And of course, my line is only income tax, so I will deal only with the income tax, because redevelopment also, number of problems are coming in income tax. But luckily, everything is sorted out in favor of SSC. That is the very beauty of the whole thing. This redevelopment has also become very, very important nowadays, because government is also giving a lot of incentive, and property value has gone up. I was just going through one magazine, Euro Dollar, issued by American some company, and they say 100 years back, somebody predicted in India what will be the property value. And in 1920, they predicted in Malabar Hill area, rate was 1 rupee per square feet. Flat was available at the rate of 1 rupee per square feet. And that time he predicted how it will go up. That time he said in 1930 it will become 10 rupee per square feet. 1950 it will become 50 rupee per square feet. 1960 it will become 100 rupee per square feet, which of course we have seen in the past. In 1980 it will become 1000 rupee square feet. In 2000 it will become 10,000 rupee per square feet, which also we have seen practically nearer that figure. 2010 it will be 30,000 rupee per square feet. 2020 they say it will be 1 lakh rupee per square feet, which I am seeing now in 2014 itself in Malabar area. Rate is 1 lakh per square feet in few buildings. 2020 it will be 1 lakh rupee per square feet. 2030 it will be 10 lakh rupee per square feet. And by 2050 it will become 1 crore rupee per square feet. So you can think of why it is, real estate is very, very important. And same proportion it will be in all over Bombay, maybe a little here and there. Now friends, question comes, when building go under redevelopment, either I am a landlord, I am a member of the society is owner of a plot, and so building go for redevelopment, I get ownership flat, or it may be tenanted building. I may be tenant in the building and I may get the property in redevelopment. It may be residential building, it can be commercial building. So what are the various provisions? When builder give you more area, he give you certain inconvenience allowance, he give lot of corpus to the society, he give rent for the next 2 3 years when building is under construction, whether they are taxable, whether they are not taxable, what condition is to be fulfilled. So to save future litigation, what I will just go one by one. In case I am a landowner of a flat, I am holding certain shares of a society, and because of that I have right to use occupy the property. So normally we call ownership apartment. Basically society is the owner, but sometimes we feel we are the owner, but we are holding certain shares, so I have right to use the area. And if I don't pay society charges, then under section 101 society can file case against me and they can take even possession of the flat back. So I am only a simply shareholder, but we call it a ownership. Now under that situation, if I am holding flat for more than 3 years, and so it is known as a long-term capital gain in income tax, and that building go under redevelopment, I surrender my flat to the developer. Within a 3 years, he will give me another flat, then and he will give me more area also. I am not liable to pay tax as per section 54 of Income Tax Act. Now let us take a situation. I am a tenant in a building. If I am holding the flat for less than 3 years, then of course I have to pay the tax. If I want a different area, but I am holding more than 3 years, it is exempted. Now, if I am a tenant in a building, let us say building in Kalbari area, I am having a flat of say 200 square feet or room of 200 square feet, building is going under redevelopment, I get alternate accommodation. For that purpose, there is a section 54F. If my tenancy is more than 3 years old and I have no other place to stay, and this is my house which I am getting, then it is exempted. If I already have one flat, this is my second flat, then also it is exempted. If I already have 2 flats of ownership anywhere in world, then I will not get deduction of the alternate accommodation which I get in lieu of the tenancy right, and I have to pay income tax on that as a capital gain. If my tenancy is more than 3 years old, if my tenancy is less than 3 years old, then of course I have to pay the short-term capital gain tax, which is like a normal income. In case my ownership office is there, and that building go under redevelopment, the deduction is available for higher area only in case of a residential building, not in a commercial building. In case I'm ownership of office is there, I surrender 1000 square feet, I get 1500 square feet, then difference 500, I have to pay income tax on that. In case I'm a tenant in a building, in commercial or building, my office is there, and I get alternate accommodation in redevelopment, whole amount will be taxable. Whatever the stamp duty value of the property, I'm liable to pay the tax. Now question comes, for example, I have a 1000 square feet flat today. Building is going under redevelopment. Builder is going to give me 1500 square feet. I pay no tax. But for example, I request the builder, you give me only 1200 and give me some money. And if he give me 1200 and give me the money, then money is also liable for, not liable for the tax. If I am having 1000, I get 1000, get more money, no tax. But in case I have 1000 square feet, I tell the builder, you give me only 700, but give me more money, I need money. Then the difference 700, 300 square feet which I am giving to the builder, that portion will be subject to capital gain tax. Whatever extra money I am getting, more than 300, that will be exempted in income tax. So as far as more area, less area, I am not liable to pay the tax. Then second question comes, when today in building I am paying maintenance charges, maybe rent I may be paying 100 rupee or 200 rupee. My society maintenance may be 1000 rupee. After there will be multi-story building of 60 floor or 100 floor. And today I may be on first floor, I may be on later on 16th floor or maybe 17th floor. Maintenance will go up, high security will be there, lift will be there, swimming pool, health club, all facilities will be there. And today maintenance may be 1000, tomorrow it will be 10,000, which I can't afford. I may be retired person, I may be old person, or that kind of, so that purpose, builder gives substantial money to the society, which is known as a corpus. Sometimes I have seen the builder give 100 crore, 150 crore, also a big project. Now that money given for the purpose and the corpus, so society can invest in certain investment, which is permitted in the law, or keep in a cooperative bank, and earn interest out of that, so that can take care of your increased maintenance charges in the future. Now whether this amount is taxable, then earlier income tax officer used to charge tax on that, litigation was there, but recently Bombay Tribunal and Bombay High Court in case of Jethalal Mehta, Supreme Court in the case of BCC City's case, decided that any corpus money society receive is not subject to income tax, it is not liable for tax, because principle is that if there is no cost, you can't work out capital gain. Capital gain is you to work out what is the sale value minus cost. Now here builder has given me corpus money for the future maintenance, which has incurred no cost. My odd flat member has received more area than what they had. So this amount again is not taxable. And I will give you one example here, very interesting example. If there is no cost, BC Srinivasan Sethi was 30-year-old case, that case is decided if no cost, no gain. Then later on, number of times, law was amended. 5 items, even there is no cost, they are liable for tax, and that include tenancy right. Tenancy right where surrender, I have no cost, still liable to pay the tax. Goodwill, I have generated goodwill, my name of firm is Vimal Punmiya and Company. Tomorrow I sell to somebody give me a 50 lakh rupee, that will be subject to tax because that is exception. Road permit, loom permit, paintings, I may be making painting at my home, but still I have to pay tax on that item. Otherwise, over and above this 5 items, to make it more clear, I will give you an example. One of my client, 3 persons come together, A, B and C, they purchase a plot at Hira, everyone has contributed 1 crore rupee and they purchase the plot. They spend another 3 crore rupee and develop the plot, so plot was developed, so each person has contributed 2 crore indirectly. Everyone was the 1/3 shareholder of the plot, company was the owner of the plot, and everyone was the director also. Today market value of their plot is 600 crore rupee. So Mr. A, who was the 1/3 shareholder and director, wanted to sell his rights. He found one person from Dubai and he agreed to sell his 1/3 share to Dubai party for 200 crore rupee. Dubai party paid in the money. Then what happened? Dubai party filed a transfer form with the society. He kindly transfer shares of A in my name. A want to retire as a director, kindly appoint me as a director. Now my client, who was at serial number 2, he objected. He said it is a private limited company and you cannot transfer shares like this. First you have to offer to the present shareholder, and the present shareholder said no, then only you can sell to outsider. So immediately Dubai party came. He met my client said, I am interested, you are buying at 200, I want to pay 200 crore. He met third person, who was the 1/3 owner. He said, neither I want to sell, nor I am interested in buying. Whether you buy or we buy, I have no problem. Then to settle the things, the Dubai party paid 20 crore rupee to my client to give his NOC. So NOC was given by my client, he got 20 crore, shares were transferred in name of the OE party, he became director, whatever procedure was completed. Now 20 crore which my client got, whether that is taxable. Because what happened, he was earlier 1/3 shareholder, today also is 1/3. He was director in the company, today is also director in the company. He had no right specific in shares of A, so tomorrow A may say, I don't want to sell the shares. What right my client having those? So court have decided that 20 crore what my client has received have no cost, so not liable to pay the tax. So same principle, whatever corpus received by the society is not subject to income tax and not liable for the income tax at all. Then normally we get rent for temporary altered accommodation. Building will go under redevelopment. Builder normally gives, as I already explained, he will give post-dated check and whatever is this thing. Now whether for example, I am a tenant in a building or I may be having flat in building, my building go under redevelopment. Builder is giving me check of 1 lakh rupee per month rent, 36 month rent in advance, or maybe every month 1 lakh. Now question comes whether this is taxable. Now if I am receiving 1 lakh and I am paying 1 lakh again, I am making no profit, so no tax. I am receiving 1 lakh, I will be paying 1,20,000. I will like some good property, so I will be paying 20,000 from my pocket. I am not saving anything, no tax. But in case I receive 1 lakh and pay only 80,000 rupees, or I pay nothing, I may have some another relative whose flat is vacant, I may stay there, or I may have another flat. Then if surplus is saved, that amount is subject to income tax and income from other sources, and I am liable to pay tax on that surplus. If there is no surplus, I am not liable to pay any tax on that. Now, for building will be under construction for 3 years. I will be, lot of inconvenience will be caused to me. I have to sit somewhere else. My office will be having little more distance. My children's education will suffer. Everything will suffer. So normally builder gives certain hardship allowance to the person who is temporarily shifted there. Whether question of his hardship allowance is taxable or not. Now, same principle, hardship allowance have no cost. Some hardship to me may be worth 50 lakh rupee, same hardship to my peon may be worth 50,000 rupee, same hardship to Mukesh Ambani may be worth 50 crore of rupee. So you cannot count in the monetary term, and it has not costed you any money. So again, same principle of B.C. Srinivasan Shetty's case of Supreme Court, whatever hardship allowance you receive is not subject to income tax, and it is exempted. And recently tribunal decided in Bombay tribunal hundreds of cases, and things is very clear. And Jethanand case has been decided by Bombay High Court. B.C. Srinivasan Shetty's case has been decided by Supreme Court. So reasonably things are clear. In our country, that way nothing is clear. Supreme Court also changes its view after every 6 months. High Court today may say something else, tomorrow may say something else. So we have to understand that and go proceed further. Because Supreme Court decided 30 years back, B.C. Srinivasan Shetty's case. After that also, income tax officer has made addition in hundreds of cases. Yesterday I have seen one society of Bandra, where Kalpatru was constructing the building, they raised a demand of 80 crore rupees. All corporate, whatever money is spent by the builder in developing the building, cement, metal, TDR payment, everything is in society's hands. The builder is spent on your behalf. So such things are not free from litigation. But overall, looking to the situation, looking to the Bombay High Court decision, looking to the Supreme Court decision, looking to the tribunal decision, and overall we can say a corpus amount is exempted, hardship allowance is exempted, extra area is exempted, rent received, if I spend deductible, I save something, I am liable to pay tax. Now many times builder give lot of amenities. Of course, one has to seek care, sir already explained to us. But let us assume that we have got a good developer and he is giving you all the facility, modular kitchen, refrigerator, because sometimes I have seen in the agreement, except wife, builder give everything to you. Simple, one person, a bachelor, he get everything there in the flat, whatever he want, except wife. Only he has to find the wife actually. And sometimes future it may happen, the builder may say, I will provide you wife also. So whatever hard wife goods, builder provide. Now many times, which is a fix to the building, which is known as a fixtures, which you cannot remove. Those items is part of the building, not liable for the tax, that is part of the flat. If builder gives you something extra, television, refrigerator, sofa set, which is a movable, you can move from one place to another place, then whatever the value of that property, if that is less than 50,000, then it is exempted. If you get more than 50,000, that amount is taxable. So many builders, what they do, they give you partly before 31st March, partly after 31st March, and accordingly it can be worked out. Now value is to be determined not what is the cost of the builder. Value is to be determined what is the value in my hand. If after receiving refrigerator, if I sell in open market, how much it will fetch, that is the value. So value, normally electronic item, value one can take 50% what builder is spent. And for more than 50,000, I have to pay tax. Less than 50,000, it is not taxable at all. Now, if builder, whatever saleable area for the builder, I know many developers are also there, whatever flat they sell, for example, 100 flats are constructed, 50 flats are given to the project owner, 50% builder is going to sell to the outside person. And there, of course, now last year law is amended after 1st April 2013, if builder sell flat lower than the stamp duty value, then builder is liable to pay tax as per stamp duty as a business income. For example, I am a builder. My stamp duty value of a flat is 1 crore rupee. I sell to somebody for 80 lakh rupee. Still my sale value will be taken at 1 crore. I am liable to pay tax on 1 crore. And buyer who got paid me 80 lakh and got the flat, he is also liable to pay the income tax on 20 lakh rupee. Because he paid 80 lakh, he got property worth 1 crore. But as far as redevelopment area is concerned, as far as old flat owners are concerned, as far as old tenants are concerned, they still enjoy the immunity. They are not liable to pay any tax whatsoever. Now, many times it happens that society put a lot of conditions to the builder. Many SERIVCE state, the society will have AGM in Taj Mahal Hotel, builder has to pay. Society will appoint his own advocate, builder has to pay. Society will appoint his own chartered accountant, builder has to pay. And society will do number of architect, engineer and structural engineer, everything society will appoint. Builder will have his own society to supervise. Society will advise project management consultant, builder has to pay. Now what happens? If builder pay directly to those persons, then builder will have control on that. So society put a condition that we will pay to those parties. So the person will be employee of the society and they will give account to the builder and then builder will reimburse that much money to us. Such amount, wherever reimbursement is involved, not liable to pay the tax. I will generally give an example. For example, I go to Delhi for some client's work. I spend 80,000 rupees, hotel staying, plane fare, taxi fare, everything. And I send bill to 80,000 to client. I recover this 80,000, no profit, no loss, I am not liable to pay the tax. For example, I go to Delhi for one client, but there I do number of other work also. I take the file of 3 clients, I attend all the 3 matters, and I send 80,000 bill to all 3 clients. If I spend for you. And luckily all 3 clients send me 80,000 rupees. So I get 2,40,000. Spend only 80,000. 1,60,000 will be taxable in my hand. So society charge exactly what society spend. We pay no tax. If society charge more than what we spend, if society may charge that we had a party in Taj Mahal Hotel, but they have parties in some another hotel, and is charge more to the builder, that difference will be taxable. Whenever builder give money for reimbursement amount to the society back, society builder is not liable to deduct TDS, because when society spend the money, that time whatever TDS is applicable on contractor or rent or whatever will be applicable, when builder reimburse, whether it is corpus, whether it is inconvenience allowance, whether it is rent or reimbursement expenses or extra area, no TDS income tax provision come in the picture when builder give to the society. But when society pay, yes, society has to deduct TDS on that. Now many times persons say we have 100 members are there, we have sinking fund of 5 crore rupee. Now builder will redevelop and construct 200 building, and that time sinking fund remain as 5 crore. And other flat owner, we have contributed, 100 old flat owners contributed this 5 crore. Why new flat owner who come 100%, the new building will have 200 flat, 100 will be old, 100 new sold by the builder, and why they get benefit of my sinking fund? So for that purpose, member many times feel we want to distribute the sinking fund. Legally sinking fund cannot be distributed, registrar will not give the approval, but via media can be worked out that you give this much, society give this much construction cost, sinking fund cost with the approval of registrar to the builder. And builder give more money to the flat owners as an inconvenience allowance, then of course things can be worked out. Otherwise, what corpus society is getting, old member will get benefit and new member will also get the benefit, because corpus will remain in the society. New member will be also part of the society, old member is also part of the society. So if you want to give benefit to the old member, then let society spend, give to the builder as their contribution, and builder give more money to the new purchasers, so they can old purchasers, so they can get the money. Many times, recently one old person came, 80-year-old, and he said, Punmiya, I am getting corpus money, I am getting inconvenience allowance, I am getting rent. Now you are saying everything is exempted, but tomorrow if government changes, what happens? Government change the rules. Government change means not Modi comes or Rajiv Gandhi comes, I am not on that change. But for example, rule changes. Tomorrow Supreme Court say, no, this amount is taxable. Then where I stand? I don't want to leave problem for my children. So one option can be, those senior citizens who don't want to take risk and who have seen 80 years of life or 70 years of life and they feel that nothing is sure in our country, those person can invest some amount, 50 lakh rupee in certain bond. Government has only 2 bonds, which if money will block for 3 years under section 54 EC, money will block for 3 years, you earn interest of 6% or 7%, and after 3 years you get the money, and that amount is not taxable. So the amount is in range of 50 lakh rupee, then one can go for those such bond. If you can take the money into installment, 50 lakh can be invested before 31st March, 50 lakh after 31st March, or whatever planning is possible. So then even assuming that some court tomorrow decides this amount is taxable. And third option, assuming you don't want to invest the money, definitely you are not liable for a penalty. In our country, no, penalty is the main word. Whatever happens, you cross the signal and you miss something, you have to pay the penalty. Police wala will say pay 100 rupee penalty, somebody will say pay 200 rupee penalty. So the penalty position, recently, luckily, Supreme Court has decided one case, in case of Reliance Petro product, and in that case, Supreme Court said, if you have declared everything very clearly in your return and claim exempted, it is not liable to pay tax, then there will be no penalty, because one SSC, what SSC can do, he can only declare in the return. Law is so complicated. Even today, what Income Tax Department collect the tax, for example, they collect tax of 7 lakh crore rupee. Naturally, 30% tax. So person must have declared income of total 20 lakh crore rupee. Whatever tax is collected, double of that income is exempted income. So things are very complicated. We claim certain exemption, ITO disallow, matter go in litigation. So once you have made a declaration in your return, very clearly, I received this much money as a corpus or inconvenience allowance or rent or whatever, and ITO not allow you the deduction. Tomorrow you lose before appellate authority, still there will be no penalty, only you are liable to pay tax and interest. But assuming you want to save that also, 50 lakh can be invested in certain bond, and of course one can claim, because definitely this is not an income. Income means there are 6 heads of income. One is a salary, interest on securities, rent income, house property, business income, property firm, partnership firm, capital gain, sale and purchase of property, and other sources with interest and dividend. So this receiving hardship allowance, receiving inconvenience allowance, receiving rent against the alternate accommodation, it not fit in 6 heads of income. And whatever will not fit in 6 heads of income is not subject to income tax. Like our stamp duty, we have 62 entries. 62 type of document is liable for stamp duty. If you can prove your document is not part of 62, it is something other than 62, then you are not liable to pay stamp duty on that document. So similarly, such amount is not part of an income and not liable for pay tax at all. Then question many times come implication about VAT and service tax. Now my view I am giving, because what happened after property value has gone up, everyone feels a builder have lot of money. Redevelopment there is a lot of money. And chartered accountant, advocate, architect, structural engineer, everyone want to make the money. So that way, government department, VAT, income tax, service tax, everybody after that. So apparently, whatever area builder is giving me free, I am not paying anything to the builder. In my personal view, on that part, VAT and service tax is not applicable. If I am buying, for example, builder is giving me 1300 against 1000 square feet, and I want to buy from a builder 1500, I say I will pay you for 200 square feet. You give me 1500, and builder is giving me 1500, and 200 I am paying to the builder. That portion will attract VAT, that will also attract service tax, but not 1300, which I am getting free, I am not paying anything to the builder. Then friends, sometimes it happens, money received on a cancellation of the agreement. I will just finish another 5 minutes. Many times we make an agreement, deal is cancelled, and that purpose, whatever money received on account of a cancellation of a deal is not subject to income tax. Let me, before to save time, let me give an example so you can understand. One of my clients has sold one plot to Raija builder for 150 crore in Thana. 2 years back, price has gone down. So what happened? Raija, they paid 25 crore under money through the solicitors, and they refused. They say we are not interested in buying the property further. Now my client say under the agreement I will forfeit this 25 crore rupees. Raija say I will not allow you to forfeit. Matter went to solicitor, had an arbitration, and finally solicitor say 15 crore will be forfeited by my client, 10 crore we will give back to the Raija, cancellation will be made. So question came whether 15 crore is taxable or not. What money I still am under a plot. I got 15 crore. So as per section 51 of Income Tax Act, any money received by way of a forfeiture is not subject to tax, but it will reduce from the cost of the property. Now the plot which my client sold to Raija for 150 crore, cost of that plot was only 5,000 rupees, which he purchased in 1947 when Britishers were going from our country. So the 5,000 will become zero, remaining 14 crore 99 lakh 95,000 will be exempted. So if such situation come in redevelopment, any cancellation is not subject to income tax. Many times we purchase a flat from a builder, we say, builder say I will give you possession within 3 years, but he don't give possession. Whether I will lose a deduction under section 54 or 54F, number of decisions are now there. If I have done everything which is to be done, I made an agreement, paid stamp duty, registered the document. The builder is not handing over possession to me, which is not under my control. So court have taken a view. If the mistake is not of the SSC, mistake is of somebody else, which is a builder most of the time, then you are not liable to, you will not lose the deduction, still you will get the deduction. But let us take a situation, I buy a flat from Raja Builder. He say, I will give you possession within 3 years. But he give me after 5 years. And I cannot wait for 5 years. So after 3 years, I sell the property. I purchased property say in 2010, I sell in 2014 without getting possession. Then also it is taken a long-term capital gain and not a short-term capital gain, and I will got all the benefit of section 54, 54F, 54EC, whatever is available in development, then all will get. But once I get the possession, let us say I got the possession now in 2013, I purchased in 2010, I want to sell in 2014. Now once right to acquire property is one capital asset and possession is something else. So if I sell before possession within 3 years, it is long term. If I get possession and then I sell within 3 years, date is be counted from date of possession, not date from original agreement. So we take the possession in between, position will be different. So right to acquire a flat and flat itself both are a different item. I think friends, I tried to cover and time is also over. Thank you very much.